Good morning, everyone. It is Tuesday, September 20th. This is a look at the markets, and I left this up here. You can see on the SPY in the lower left-hand quadrant there that we have the gap marked out here. If we pull this back, let me do a 1-day 5-minute, so you can see that last night. Here we go. Last night, right after we closed, we did, in fact, fill that gap. We closed at 387.93. However, we did go up and close that gap in the overnight hours. Now, that would still show, if we opened up above here, that would still show then another little gap, because on the daily charts, we don't show that extended hours price action. Nonetheless, we came back here today, and we are now back through the gap to the downside. I don't know if there was some news maybe other than the mortgage and housing that it's really slowed down. And with that, a little bit of a side note on the Fed, we talk about tomorrow is the announcement. We talk a lot about what's going to happen, and all the analysts are, well, this is going to happen, that's going to happen, this should happen, they should have done this, they will do this, this is how the market's going to react. It is a constant barrage of people with apparently either a magic 8-ball or a crystal ball. Mine doesn't work, so I can't tell you what's going to happen, but I can tell you that I will participate in what does happen. Now, I will say this, with the cooling housing market, we'll listen for Fed speak specifically about that, because typically as the housing market really starts to cool, and we're seeing that not because necessarily just because of inflated prices, which have started to contract a fair amount, it's because of the monthly payment. That's what we look at. How much house can I afford at this monthly payment? Obviously, when you've now pushed those interest rates up, a few percent, your ability to make that monthly payment has changed. So you're in smaller houses, or maybe you're like, well, I have equity in mind, I'm just going to stay here, maybe just make some improvements on my own home, and that kind of plays into it. Well, from a Fed standpoint, that's actually kind of a big deal, because if the housing market's starting to slow, they're going to start looking at other things starting to slow down. And typically when you have some of the commodities like wood, lumber, things like that start to really contract, and then the housing market follow, well, then the rest of the market as well will follow. So we've had an incredibly strong labor market. There's a lot of, typically with the Fed and recession and stuff, you kind of see everything moving in the same trend, right? And we're not really seeing that the same because of the reopening post-pandemic. We still have an incredibly robust labor market. So with all of that, you kind of lay all that over on top of each other. Some areas are recessive, but not all. So it is a very complex picture, and very tricky for the Fed here to try and navigate. However, I will tell you that constantly raising rates, that trickles down not just in our borrowing capability, but it trickles down into all the businesses, and then all of that when they're trying to make improvements or needing to finance. I mean, everything, whether it's technology, which sees it first, but you look at agricultural, anything that has to do with any kind of manufacturing, when their costs go up, so do ours. So higher interest rates, really just a higher tax on us as well. All right, all of that being said, I think it's an 80% some chance that they're going to raise by 75 basis points. And then we're going to look for language. I would say that, they may say something along the lines of, we're going to do this, and then we're going to wait and let the market data tell us if we need to do another one at that 75 point. We'll see what they telegraph. But again, you're trying to sit here and guess what they're going to do. It's a fool's errand, right? Because they're going to tell us what they're going to do. You might as well just wait another day at this point. Okay, also markets will probably be choppy. Yesterday, the bulls stepped in. Here we go. The bulls stepped in pretty nicely, nice long tail. This is the futures chart. We can see that the US dollar is gaining some strength here pre-market, which will push the SPY lower. A strong U.S. dollar is not always a very good thing for the market. We also saw that China cut their short-term interest rate. So they're kind of doing the opposite of what we're doing. Anyway, this was the SPY yesterday. Really nice push back up. Like I said, we on the this is the futures, but on the SPY, we did fill what little was left of this gap here in the post market, right after the close. This morning, we're back inside. We're sitting right along this Fibonacci line here. We'll see if we use that and then continue to push up and fill the gap properly during the market. Okay, all of that. Some things to maybe watch here into the Fed. Obviously, they're going to raise interest rates. By how much is the only outline. It's probable that they don't do, or it's probable that they will do 75 basis points, but it's possible that they do more or less, right? So anyway, Wells Fargo and Bank of America, incredibly sensitive to these interest rates. And Bank of America in particular, because of the number of mortgages that they own. I've found out about it over the weekend, and I was listening to the CEO and just how many they own. It is crazy how many household mortgages that they do own. So very sensitive to interest rates. You can see yesterday they pushed up pretty nicely. We're going to look for some continuation in that. Now, this could be a nice overnight swing, but I would probably be out right around that Fed market time. Okay, so I'm looking at the 10/21/35 calls in Bank of America. Again, take a little look at Wells Fargo as well. I like an entry around 34.69. I'm going to close it if it looks to close below the 8 EMA. And I am going to target 35.02 and 35.63. A little bit lower targets simply because don't have a lot of time before I want to be out for the Fed, but for a swing. If we get through that 35.63, I would then maybe look at a target of 36.94. Yesterday we saw basic materials and some metals move fairly well. Love this LTHM chart. Regardless of the sector, although the sector's doing all right, look at this use of the 2020, right? And we're pulling that 3 nicely back away from the 8. This isn't a very expensive issue, so a little bit easier to play. Be careful, the spreads can get a little wide, and if they're wide, stay out. If they tighten up, that's your cue to get in. Okay, I like the 35 calls. My entry would be 34.66. Again, another one that I would close if it looks to close below the 8 EMA. And my targets are 35.27 and 36.39. Oh, I guess maybe 36.38. Then it'd be a breakout. Let me just change that real quick. I thought it was 39. My bad. And then it would be a breakout, but beautiful uptrend with very nice pullback, starting a consolidation. And there's also a monthly pivot in here that is holding us in place. All right. And Tesla. Talked about this several times through this trend line, using it, pushing up very nicely. We're up above all these major moving averages finally. Really nice look on a potential breakout here. Now, obviously, we think about interest rates and that would hurt tech. Absolutely. Tesla's kind of its own beast. So you have to really just pay attention to what each individual candle is telling you and understand that it may not have anything to do with what's going on in the rest of the market. It's a very different following. Yesterday it had, not yesterday, but Friday it had beautiful volume on this reversal. Yesterday came right back in, pushed up just above this most recent high, but settled in right there at that high. I'm looking for a breakout, a short-term breakout on this. You may even, if it comes back in a little bit, or a couple people point out this was an inverse, or asked if it was an inverse head and shoulders. I suppose you could make the case that yes, this could have been an inverse head and shoulders. This would be the head. This is one shoulder, and then they counted this as another, as that 3 tap back. I think, to me, I would have liked to have seen something a little bit more orderly, but I understand where somebody might see that. The important point is that we follow today's price action. Love this look back up through here. I like the 310 call. Now, if you look at the calls that are not at those big round numbers, they're a little skewed looking, and that is because they split, but these calls had already been written. So you will see a funky, like 307.66. I don't remember what it is, but it's a funky number, and that's because they did a 3-to-1 split. Okay, My entry is going to be 309.84. I'm going to close if it looks to close before the 20 MA. I would consider Tesla as an overnight, but you have to be prepared, you know, and really stick to your stop losses. I am targeting 314.67 and then all the way up to 333.33. Okay, some others to keep an eye on. Starbucks, beautiful. We talked about that several times yesterday. Volume has fallen off from that, you know, post Howard Schultz and everything that they're doing there. But nice little bull flag set up there in Starbucks, Netflix. So it melted a good portion of the day yesterday and then turned right back around and pushed right back up. It got several upgrades. Look at Roku to move along with this, but really bullish look there. And on good volume, getting ready. This one's heading into earnings in just a few weeks, what, like 3 weeks, maybe 4 weeks now? I guess maybe a month. Yeah, it's on the 18th, so right about a month from now, we'll kick off those earnings again. I know, it seems like we just got out of them. However, nice squeeze of the moving averages, moving up, lots of room here. I like Netflix. I did mention Roku to move along with it. It is pinned by the 34. Anything above the 34 looks great. And Lulu. Yep, I like Lulu. So they had these great earnings. So I think on the longer term time frame, this looks like a beautiful big old bull flag setup. So we'll watch and see if that does in fact play out. These can play very nicely. Just be cautious. Make sure that your bid and ask is nice and tight there to get in. Okay, PDD popped up on my list here as a bounce move on the cross of a 20. Now, why did I put it in here? Well, it had a really nice push up on the day on Friday. Then yesterday pushed back through that 20. Has a nice little gap here. Gave us a bullish candle inside the previous day. So the entry here would be above yesterday's high at 65.95 and look for a gap fill all the way up there to 68.12. Bearish look. So AMD actually looked okay yesterday, right? It came back, it pushed up a bit there. But MU did not participate at all. And I feel like there might just be some more downside in here, looking for a push down to 51.40 and then maybe a complete breakdown. Now, it does have earnings coming up, but a bearish look nonetheless. PG, you know, I don't know why that one's in there. I think I left that in there from the other day. Never mind, take that one off. I did want to look at PayPal and Square here. Bitcoin is really struggling. And see, here we go. Yeah, so Bitcoin is really struggling. Can't seem to stay over 20,000. Obviously, PayPal and Square a little bit more sensitive, but we saw some downgrades or lowered price targets on PayPal and Square to go with it today. So look for downside moves in both of these names on the Bitcoin weakness today. Now, if Bitcoin decides to go ahead and try and rally today, obviously, stay away. Play what's in front of you, not what you think should happen. All right, if you have any questions, reach out, Heather C. at givingtreetrading.com.